talk to you today about a topic called riders or bolt-ons. Let's talk about that, shall we? Let's get a little title going on my whiteboard here. The book calls them riders. I don't know if you want to call them that as a mortgage protection advisor. It doesn't sound particularly exciting, does it? Ride was a band from the early 90s. And do you remember shoegazing? Well, you probably don't remember that because that's just shown my 91, 92. Shoegazing was the genre of music. And Ride was a great band from Oxford. Shoegazing was where they played their instruments and they kept looking at their feet as they played them, looking all gloomy. But they were actually using their feet to adjust various changes in tone and voice. Anyway, not important to sort of share that with you. Now, riders, we like to call them bolt-ons. But even that sounds pretty awful, doesn't it? Like extra upselling. But these are things which, when you're advising on life assurance protection, critical illness, those sort of things, income protection, these are things that you can add to the policy, which give the client more benefits. And there's 6 or 7 I want to talk about now, just to upgrade your knowledge, really. Now, we go on a Friday night, normally, or Thursday sometimes, over to Simpson's Fish and Chip shop over the other side of Cheltenham. And we grab ourselves fish and chips. So we head up to the top of the hill because on top of the Cotswold escarpment, you can see the whole of Gloucestershire. It's beautiful up there. The evening's lovely. But we always get extras. So we get fish and chips because it'd be rude not to. But I always get myself some tartar sauce. Shelley always gets curry sauce. I can't be doing with curry sauce. People love it. But last week I got myself some halloumi bites as well, which go with them. Salt and pepper, of course. These are all extras, add-ons. And you can add things to your policy. And the first one to talk about is waiver. Waiver of Premium, or WOP as it's called, Waiver of Premium, which is an option which you can add to life assurance critical illness. It's normally automatically included in income protection. And what this one does is it gets insurance company to maintain your premium for you if you're ill and can't afford to make payments. So life assurance, of course, needs to go on. Income protection, you probably claim against. Critical illness carries on because you're not ill enough to claim against that. But it keeps your premiums going for you. So it just keeps the policy going. It's not expensive. It's 2, 3, 4% of the cost of the policy, of the premiums. It's not a lot of money, 5% maximum. And it really does give you a nice little peace of mind. There is a short deferred period. I think it's 30 days typically. So if you're ill for 30 days or more, they'll pick up the premium for you. So it's definitely one you should tick the box on and quickly go for. Don't dwell on it. Just strongly advise the customer takes it, because all your customers do. People like to go with the crowd, don't they? With a joint policy, you have to choose who gets it. It's not always available to 2 people, so you might want to look at the main breadwinner possibly. The waiver of premium, and that's pretty much waiver of premium. Not much more to it than that, really. One that I do like is terminal illness. There you go. Terminal illness. A friend of mine actually claimed against this one. Who died, had cancer, terrible. But he had life assurance like everybody else, and he was diagnosed with cancer. And he was diagnosed he was going to die within 12 months. Terrible. But his life assurance policy paid out in advance. That's all it does. It would have paid out, don't get me wrong, but he had like 8, 9 months to live, and he wanted just to go out with a bang, really. He wanted to have a good time, bucket list and all those things. So the terminal illness benefit paid out his sum assured in advance, and I think that's a really good thing to have, don't you? Because you could either use it and spend it whilst you're still alive, or invest it properly for your family, so that at least then you know that you're providing. So it's actually a real good sort of good feeling type of benefit as well, terminal illness. Another couple for you. Change my pen for you. Accidental death. Here we are. Accidental death. Now, I was attending a conference the other month, actually before lockdown, so it's a couple of years ago now, and it was done by an underwriter from an insurance company. It's fascinating. It was. She was talking about underwriting, modern underwriting. And these days, of course, they can take blood from you and figure out when you're going to die. They know what illnesses you've inherited, etc. They can adjust your DNA. It's all crazy stuff. And she was saying that there's 2 big issues now that affect underwriters for life assurance. One is a lifestyle. So drinking, smoking, lack of exercise, obesity, those sort of things affect people's life duration. Of course they do. But also, should accidental death. You can't, she said, calculate or estimate accidental death, because you die of an accident, don't you? And that's the whole point. You have accidental death built into your policy, And what it'll often do is give you a multiple of the sum assured if you die by an accident, because it's so unusual. Of course, we've all known somebody that has, but it's very unusual. I mean, my best mate Steve, when I was in my early 20s, died in an airplane crash. I suppose that's accidental death, isn't it? But that's the point. You get an extra sum assured, usually a multiple of your sum assured, and some actually provide that for free as well. And you often see that in the newspaper or the online stuff where people want free life assurance. Accidental death's free, So that's accidental death, which, it's a good thing. Another one for you. Total disability. Let's squeeze that one in here for you. Total disability. There you go. Is an interesting bolt-on. What this one does is it, so you can't work because you're too ill, but you won't die of the illness, if you see where I'm coming from, and it'll pay out a lump sum, usually the sum assured. So you're not going to die, but you can't work because of whatever illness you've got. And critical illness is probably not what you've got, it's for life assurance. So that's total disability. Can't work because you can't, but you won't die of it, therefore it'll pay out your total disability, pay out your sum assured. These are lovely little extras, aren't they, really, which they're only pennies in the great scheme of things, but they do give extra benefits to the customer as well. A couple of my favourites now, GIO as we used to call it in the old days, GIO, or guaranteed insurability option. GIO is called. It's built into most life policies, and it's pretty clever really. What happens here is that you set yourself sum assured, and they're usually fixed, aren't they? But if there's certain things happen to you in your life, like life events like getting married, having children, you can increase the sum assured without medical evidence, which is cool. Usually a percentage. So for example, if you get married, you can bump up the sum assured by a certain percentage. Or if you have a child, you can bump up the sum assured without further medical evidence. You still got to pay for it. Your premium's still calculated and increased, of course it is. But they're not going to send you to the doctor to check you out, particularly if you've had some kind of illness or something like that. So I've advised clients to claim against these things or to increase their cover when, if you went through the normal route, they would have been checked out by the doctors and given some kind of loading. So that's guaranteed insurability option. And the last one for you, which I quite like, is called Buyback. Let's sneak this one down here for you. A buyback option, which not a lot of people are aware of. Say, for example, you had a term assurance for a mortgage, level term, but you added critical illness to it, which is a great thing to do because it covers the mortgage. It's not that expensive. So the customer's got a joint critical illness and life assurance policy, say in joint names, or in single names, doesn't make a difference really. If the client has a claim against critical illness, the policy pays out and the policy stops. It's not like income protection, which goes on. Your lump sum is paid, the policy stops because it's come to an end, and you've got money in the bank to change your lifestyle. Now you've lost, though, your life assurance. Think about it, because you claimed on the critical illness. So you have this thing called the buyback option, which allows you to buy back the life assurance element and continue the policy without further medical evidence. Think about it, you've got this like dread disease now. The chances are you're not going to get life assurance, are you? Because you're uninsured, possibly. So the buyback option is a very useful one if you have a joint term assurance and critical illness policy as well. Sometimes they have it for joint life assurances where partners, husband and wife, for example, divorce, go their separate ways, usually cancel the policy, don't they? Sometimes they allow them to take out single policies for maybe half the sum assured or something, again without further medical evidence. That's quite useful as well. So there we have a number of riders or bolt-ons. Do Spotify ride. You might like the genre. It was it was called foot gazing was the thing, or sort of just it was just loud. They had this cacophony of instruments where they layered one on the other. Loud voices, loud music, loud guitars. And you could hardly hear the lyrics or make the lyrics out, but it was just a genre of music. And then Britpop came along, saved us all. The likes of Blur and Pulp and Oasis came along and saved us all from some feet-gazing music, or whatever they called it. Anyway, enough of that. Hope that's been useful.